You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is, I don't know, Thursday? Sounds good. 21st day of April 2016. Let's take a quick look at the numbers. We had a huge technical malfunction there right at the open of the show. My X-Split broadcaster, which I know means a lot to you, suddenly didn't work today because, for those who don't know, we simultaneously stream on YouTube. Yeah, I know some of you will be messaging me and emailing me shortly going, hey, where's the YouTube stream? Some people just prefer to watch it there. Also, it prevents me from having to upload a recording to YouTube at the end of the day. It's just already there. And then this morning it said, you're missing a token or you need to reauthorize. Setting that whole thing up was such an incredible nightmare. And now to think that I got to go back through it again and figure it out all over, it's like, oh, really? Maybe we don't need that. I don't know. But I guess if enough people raise their ire and say, I want to watch it on YouTube, I guess I'll have to, because for the longest time, we just upload it at the end of the day. Do the show, then you have to go through a rendering process, and I know that doesn't, get your motor running. What's that? Rendering. Don't worry about it. But then after it finally renders, then you can upload it to YouTube, and then you can tag it and do all the other fancy stuff. I know what. Let's look at the numbers. How about that? Now, as you can see on the chart in front of me, the S&P 500 Emini Futures, we've done a lot of the same for the last couple days. I mean, this was the Sunday night Globex Open. We gapped lower on the open. That was kind of a tip-off often that we're heading lower, right? But we quickly found out that we were heading higher. But in a leg and a retrace and a big leg that covered two zones from 65 all the way up to 87. Then we got caught in this zone to zone to zone business here. Zone to zone to zone to zone to zone to zone. Almost back to the zone. Now, this becomes important. You see, as buyers push this up, they had a nice 7+ point move. And so when price came back down, they said, hey, let's ride that ride again. And this time they took it even higher. And so this morning, as we were watching the markets in the live trading room, as price got back down to this level, look what happened. We went exactly one tick lower. The swing low here was 89.5, and the swing low here was 89.25. So we overshot it by one tick. Then the buyers came in, pushed it back up. At this time, they weren't able to do this or this. They did this right inside of the highest weekly zone, and now we're heading back down, doing what we had thought. In fact, this morning in the live trading room, one of our partners, Joel, had said, looks like we're setting up for a trend down day. And really, there's nothing that's happened yet to rule that out. I mean, as the day progresses, we could see we've got to break this 87.88. I mean, look how 2, 4, 6, 8, 10, 12 and a half hours this held as support. Sent this up, back down. Buyers came in early, ran it up off the top of this zone, held it up, and then we got back right in that same area. They ran it, but this time they can only run it as high as the weekly zone. So that tells us that there's a little more pressure on the sell side than there is on the buy side. Let's see what volume looks like for the week. That looks pretty normal. Okay, so the numbers from around the world, we'll start here in the U.S. The Dow is up 46 points. NASDAQ is down a little over 1 point. S&P 500 is down 5.5. So we have divergence between the Dow and the S&P, and that's not typical. If The Dow is going to be up 46 points. The S&P should be, and by should be, that's based on historical observance over more years than I've been trading. There's a 10-to-1 ratio. So they're on opposite sides of the street. Typically, if the S&P were down 6 points, which it is now, the Dow would be down 60 points. 10-to-1 ratio, but it isn't. So again, the Dow currently up. Now this is going to change before the end of the day. Somebody's on the wrong side of the street, either Dow or the S&P, because by end of day, they're going to sync up and head in the same direction. I think the S&P probably has, well, let's see what happens. The Dow up 46, NASDAQ down 3.5, S&P down a little over 6 now, and the Russell 2000 down to a little over 2 points. Okay. Crude oil is down 33 cents a barrel, which is 0.75%. Gold is down $2. If we go to Asia, things are mixed. Nikkei up 457 points. That's 2.7%. Shanghai is down 19 points. That's half of 1%. And the Hang Seng is up 385 points. That's almost 2%. And last but not least, in Europe, the DAX is up 14 points. The FTSE is down 28 points, and the CAC 40 is down 10 points. So Europe is mixed, Asia is mixed, and here in the good old US of A, we're currently mixed too, with the Dow being the only thing in the green. Got a quick article I wanted to share with you. Didn't come out today. It came out a couple days ago. And I don't know if you follow me on Flipboard, but sometimes I'm really active and other times I'm really not. 2 articles. This one is current. This earthquake in Ecuador has turned out to be a lot more severe. What's that all about? Oh, my computer's acting buggy. All right. Ecuador's president has introduced new measures to try to pay for rebuilding after Saturday's earthquake, including a one-off tax on millionaires. At least 570 people are now known to have died after the magnitude 7.8 quake. Cost of rebuilding could be as high as $3 billion, according to President Rafael Correa, who leans a little to the left. Even before the earthquake struck, the World Bank had predicted that Ecuador's economy would shrink by as much as 2% this year. Oil-rich Ecuador has suffered because of falling oil prices in recent months. Left-leaning President Correa said all levels of society would be expected to contribute to rebuilding funds, even if they did not live in the worst-hit Pacific region. Among the measures he announced in a televised address yesterday, national sales tax is to be increased from 12% to 14% for 1 year. Now, this one will make you squirm. People with more than $1 million in assets will be required to pay a one-time sum equivalent to 0.9% of their wealth. Now, you think, well, that's not a lot of money. If you got $1 million and you got to pay less than 1% to help rebuild your country, Definitely can't restart now. All right. So if you have $1 million or more in assets, you got to pay 0.9% of your wealth. Anyone who earns more than $1,000 a month is to pay the equivalent of 1 day's pay. Anyone earning more than $2,000 pays 2 days' pay, and so on up to $5,000 a month and 5 days' pay. I've been to Ecuador. There's not a lot of people making $5,000 a month. There are some at upper levels. Society is built with institutionalized commitment, with organized collective action. This is how a modern society responds to this kind of disaster, and the way each Ecuadorian, within his ability, contributes to the recovery of his own motherland. Figures given by officials for the number of people missing ranged from 231 to 1,700, with some 4,000 people injured. Thousands of people have been left homeless, making them vulnerable to dirty drinking water and disease. Foreign nationals from the UK, Ireland, Canada, Colombia, Cuba, and the Dominican Republic have been confirmed among the dead. Another 6.2 magnitude quake struck off the coast early yesterday. The World Food Program and Oxfam are sending supplies, while the UN said it was preparing a major airlift. Some people have been pulled out of the rubble alive, but hope is fading that others will be found. Remember, we're going all the way back to Saturday when this hit. Focus is turning to the survivors. The quake damaged communications, transportation links, sanitation. UNICEF has warned that 150,000 children have been affected by the disaster, and said landslides were complicating rescue efforts in some areas, and some towns were without electricity. So pray, please, for the people of Ecuador. I've been there, and they are wonderful people. They really are. Great spirit, full of happiness and joy. Now, what do you know about basic income? This is where the government pays everybody a check. It's like the whole country goes on government assistance. Doesn't mean you can't work, doesn't mean you can't have a job, doesn't mean you can't do great things. It just means everybody gets cut a basic check. Now, you got to think, well, that's insane. That can't work. Well, hang on. A Silicon Valley entrepreneur says basic income would work even if 90% of people smoked weed instead of working. I think we may already have that situation. The chief complaint people lodge at universal basic income, a form of income distribution that gives people money to cover basic needs regardless of whether they work or not, is that it will make them lazy. Sam Altman doesn't buy it. On a recent episode of the Freakonomics podcast, which is a very good podcast, if you go to iTunes, it's usually in the top 10 or top 20. Now, the name of this particular episode of Freakonomics is The World Ready for a Guaranteed Basic Income? Altman argued that basic income could support huge amounts of productivity loss and still carry the economy on its shoulders. Now, listen to what he says. This is Sam Altman, so he's a guy that kind of knows what he's talking about, or else he's been awful lucky. Maybe 90% of people will go smoke pot and play video games. But if just 10% of the American people go and create incredible new products and services and new wealth, that's still a huge net win according to Sam Altman. And the American puritanical ideal that hard work for its own sake is valuable, period, and that you can't question that, I think that's wrong. Maybe the American ideal of work is wrong. Wow. Maybe a system like basic income could allow people to focus on their true passions, even if that's smoking pot and playing video games. And the country would still function just as well because people are healthier, more fulfilled overall, and the brilliant people who don't have time to focus on their passions now would suddenly find themselves with the means to pursue their dreams. Basic income is a radical form of income distribution. Now here's what it comes down to. It involves giving people, that's me, that's you, that's everybody, a regular check regardless of your working status. So you could be a CEO or you could be the guy that pushes the mop. Okay? Basic income is a radical form of income distribution. It involves giving people a regular check regardless of their working status that covers basic expenses like food, clothing, and shelter. The idea of basic income saw brief flashes of interest in the late 20th century, but stayed mostly dormant until the last year or so. Switzerland has announced a plan to hold a basic income referendum in June of 2016, and other basic income experiments are set to start in the Netherlands, Finland, and Canada sometime in 2017. New Zealand and the U.S. might not be far behind. The U.S. push is being led by Altman and his cohorts at Y Combinator, Silicon Valley's largest startup accelerator. Now, these aren't poor folks pushing this. Altman's got a couple bucks. Out of this Y Combinator has come a number of unicorn companies. Its past success stories include Airbnb, Reddit, and Zenefits, just to mention a few. In January, Altman wrote a blog post describing a plan for a basic income experiment in fairly vague terms. It'll last for 5 years and involve a select group of Americans, although the exact start date, the amount of money given out, and the name of the researcher leading the project have not yet been announced. The complaint Altman addressed on the Freakonomics podcast is a common one. Study after study, however, has shown that giving people extra money makes them feel financially secure. That security ends up leading to empowerment, not less motivation. That's why Altman is so confident that 90% of people could sit around all day and do nothing, and the U.S. would still keep chugging along. Basic income is such an effective motivator that enough people would use their newfound free time to produce extraordinary innovations that make up for the laggards. Now, if he had gone with the 80-20 rule, I would be more apt to believe it, but he's gone 90-10. The beauty in that, which Altman hints at, is that there really won't be any laggards. 9/10 of the population won't suddenly sit around and get high, because the best evidence suggests a financial safety net actually encourages people to work harder. Even in the worst case scenario, basic income still wins. Now, the original article was written on Tech Insider. So if you Google Tech Insider basic income, up will pop the original article. This was just a bit of an excerpt from it. So I'm curious what your thoughts are on basic income. Is that something that could work in America? would it lead to people just hanging out on the couch? Keith says, I'm showing the Dow, not futures, down 60 points. Are you, Keith? Well, let me refresh my screen here. You may well be right. I thought I refreshed this thing. Actually, it's supposed to refresh itself. You're right. See, there goes my 10 to 1. Thanks for clearing that up. We better take a look at all the numbers again. All right, I just refreshed it. I don't know why this thing didn't refresh itself. Maybe the Dow component just got hung up. S&P 500 is down 5. The Dow is down 57. See, that's that 10 to 1. I knew something was amiss, and I guess the Dow was hung up. Oil down 30 cents. Gold down 290. So I think those were correct to start with. NASDAQ down 179. That's 1.79. The Russell 2000's down 3.5 points. Asia, those numbers look the same. Nikkei up 457. Shanghai down 19. Hang Seng up 385. Now that's good. Shanghai's up almost 2%. China's throwing a lot of money at it. The DAX is up 14 points. The FTSE's down 28. CAC 40 is down 9. Now down here I'm showing oil down 36. And I'm showing gold down 260. Yeah, that's right. Okay. Just want to make sure. Well, thanks, Keith, for... I just opened the chat box and saw what you had put in. Happy Thursday to you too, John B. That's odd. Everything else appeared to be correct, but the Dow, when I refreshed it, hung up. Okay. Well, at least we got the right numbers now. So that's good. So, do you guys think that basic income would be a positive here in America? Everybody gets doesn't matter who you are, after a certain age, you just get a check. Now, some arguments to the experiment say that it would demotivate people, they wouldn't work as hard, they would just sit around and smoke weed and play video games. Others argue that knowing their basic expenses are covered, food, clothing, and shelter, that the money they earn actually can go towards savings or whatever their hopes and dreams and passions are, actually motivates the people to work harder. Of course, we always come back to the question, where does this money come from? I mean, taxes are always there with their hand down. My old buddy Mark Falk was going to join us for the radio show yesterday. I haven't heard back from him. I don't know what day he's going to join us. He's really busy. He ran for office in Oklahoma the last time they had elections for representatives. And, well, let's just say he's still a civilian. But he may run again. Now, I know it'll be good radio with Mark because he leans a little left and I lean a lot right. So, let's see what Donald's saying today. And then we'll go to our good word for the day. Trump says, I'm not going to blow it. Okay, let's figure out how he's not going to blow it. And then we'll take a look at the numbers. Donald Trump is attempting to professionalize and evolve his campaign as he comes closer to securing the Republican nomination for president. The real estate mogul has in recent weeks hired more experienced and seasoned political staffers. Next week, he is planning to deliver a foreign policy speech in Washington, D.C., where he'll be using teleprompters rather than speaking off the cuff, according to the Wall Street Journal. Trump also plans to hire a speechwriter, which the campaign has lacked so far. Now, this is interesting. Here, look how far this guy has come without a speechwriter and without a teleprompter. I don't know if you've ever seen the current president attempt to deliver a speech without a teleprompter. It's a lot of stumbling and mumbling. He doesn't do well. He's very eloquent with his teleprompter, but without it, kind of lost. Interesting to see how Trump will do with one, since he's so used to just opening his mouth and it's a stream of consciousness. The campaign is evolving and transitioning, and so am I, he told the Journal. I'll be more effective and more disciplined. I'm not going to blow it. Man, I'm so happy to hear him say that. We've been saying that here on the radio show, all of us agreeing for some time. If he would act more presidential, then the chance of him becoming president would soar. Pundits and journalists noticed a change in Trump on Tuesday night after his blowout win in the New York primary. His victory speech at New York City's Trump Tower was toned down compared to his past addresses. For instance, he ditched his favorite moniker for his chief rival, Texas Senator Ted Cruz, calling him Senator Cruz instead of Lying Ted. Boy, that's just a step in the right direction. Thank you, Donald. While Trump took shots at Cruz, he refrained from his typical insults and appeared significantly restrained. However, Trump is sticking to his signature rhetoric on the campaign trail. The gentler side of Trump that political observers noticed in his Tuesday speech dissipated during a Wednesday rally in Indiana, where Trump took some of his favorite cracks at Cruz and Ohio Governor John Kasich. He also continued the crowd-pleasing antics that have become staples at his rallies, taunting protesters for being weak and telling sensational stories that play somewhat loose with the facts. Well, you can't expect him to change overnight, but at least he's heading in the right direction. Trump told the Journal that while he's planning policy speeches and hiring a speechwriter, he'll keep riffing at his rallies. Voters might not hear as much Trump on the airwaves, though. A senior campaign advisor told the Journal that Trump's new media strategy is to be less exposed and to control media impressions in order for the message to be more powerful. That would constitute a major shift for the candidate that has so far relied on social media and frequent appearances to push his message. Trump has been a constant fixture on radio and television since announcing his candidacy, using the free media exposure to bolster his campaign at little financial cost to him. Now Trump is planning on ramping up spending as he scales back on media exposure. He told the Journal that he'll spend what it takes. Trump's campaign spent $40 million in the past 10 months, according to the publication, most of which was Trump's own money. Now, let me ask you a question. If you had the money, would you spend $40 million to be the president? Last time I looked, I think the salary for president is about $400,000. I mean, he's definitely not doing it for the money. Is he doing it for the power, for the recognition, or does he really want to fix America? Does he really want to make America great again? Now he plans on spending about half that much in the next 2 months alone, according to the Journal. Trump's shifting strategy is an apparent result of changes in his campaign staff. In recent weeks, Trump advisors have reportedly started building a parallel campaign structure that gives more power to new delegate strategist Paul Manafort and advisor Rick Wiley, while marginalizing campaign manager Corey Lewandowski. The reboot of Trump's campaign comes as the Crude campaign mounts an organized effort to woo delegates who could tilt the balance in his favor at a potentially contested Republican convention this summer. Trump's big win in New York this week puts him closer to the 1,237 delegates he needs to secure the Republican nomination outright, and in more commanding position going forward, but it's still not certain that he'll be able to reach that number through the state contests alone as long as Cruz and Kasich remain in the race. Trump now leads the race with 845 delegates. Cruz gained no ground, still at 559, and Kasich has 147. Manafort is reportedly focusing on planning Trump rallies in strategically significant districts. There will be a new focus on winning not just statewide vote totals, but also the vote in specific congressional districts where most delegates are awarded. In the New York primary, Mr. Manafort picked the location of each rally for its importance in delegate selection. So, Donald, I hope you've made a wonderful choice to do the right thing. I just hope you didn't make it a little too late. That's what I'm hoping for. But then again, it was some of your off-the-wall zaniness that got you the attention that you got. So let's go to our good word for the day. Let's talk about constructive complaining. Oh, so there's a good way to complain? Let's find out. Numbers 27:5 says, so Moses brought their case before the Lord. When you get a reputation as a complainer, people will begin to avoid you. There's an interesting story in the Old Testament about the 5 daughters of Zelophehad. Here was their problem. Their father had died in the wilderness before the Israelites entered the promised land. He had no sons to inherit his land, and the law didn't allow women to receive it. Consequently, without a father, brothers, husbands, sons, or other men in their immediate family, Zelophehad's daughters were left out completely. It wasn't fair, but it was the law. So rather than complaining to others, the sisters presented their petition for an inheritance to Moses and the leaders. And when Moses brought their case before God, he agreed with the women and granted their request. Numbers 27:1-11. Now, what do you think the outcome would have been if they'd gone around whining to everyone and anyone who would listen instead of going directly to those who could do something about it, namely Moses and God? It's doubtful they'd have obtained their inheritance. Understand this: God doesn't reward complainers. The sin of complaining angered him to the extent he stopped an entire generation of Israelites from inheriting the promised land when they were standing on the very threshold. This is after taking them around the mountain for 40 years. You say, well, I've suffered an injustice, so who should I complain to? The Lord, the one who can do something about it. The psalmist wrote, I pour out my complaint before him. I declare my trouble before him. Psalm 142:2. And that's the best advice you can take. When there's a problem, when there's an issue, nobody likes a complainer, a moaner, a whiner, a groaner. Take it to God, put it in his hands, and see if the situation doesn't change or if you don't change. See, often we pray for God to change our situation and our circumstances. And what really needs to be changed is our outlook, the way we see and embrace our situation. So give that a try. That's our good word for the day. All right. Again, Michael is out, so we don't have a recap of the live trading room this morning, although we had a nice time in the live trading room today, and a lot of the partners commented that with Bert and I there, it was kind of a slow down, relaxed, country day by the river sort of thing, where we, instead of moving from market to market to market to market, we just took our time with individual markets, and we talked about what was happening, what the indicators were telling us, how the trade setups looked, and we got some really good feedback on it was a nice change of pace. Now, I know that no one wants to stay at slow speed forever, so you'll get another dose of it tomorrow, and then Monday, Michael will be back, and he'll be hitting it hot and heavy, as soon as he comes in at the opening bell, swinging left and right. Our first S&P trade this morning that we pointed out, that did run better than a couple of points. So if we'd been taking score, we'd have been one and done on the S&P this morning. And I could even show you what that trade looked like, I do believe. Unless I switched it out. No, I left it. And it was coming out of the weekly trading zone, the highest weekly trading zone. Right here. Hit a bearish cross, price pulled away, price pulled back. We drew a little trend line across the bottom of these. We got to close below the trend line. You sell the open of the next candle, down one tick, and there we go. All right, let's take a look at the S&P again. Big picture 30-minute, and let's pull up Yeah, hey Joel, thanks. No, your opening comments were much appreciated, and we still may be in a trend down day. We just had a major pullback up to the weekly zone, and then we came back down. We were waiting right here, from here to here. As we were coming down this morning, we said, now remember, at one point in the life of this candle, it was red, and we said it looks like price wants to move down to the trading zone below, where we would expect to find some good support, as we did the last time. They said the only obstacle to the move down would be the swing low right here. And sure enough, it was. We pulled all the way back up to the zone, consolidated there, and then attempted another leg down. And this leg down has taken us a little bit lower, but we haven't quite made it to the weekly zone. Okay, let's take a look at what we had going on with the weekly trading zones last night. Wednesday evening, 4:20, we got them out at 9:30. Yeah, Joel, it has gotten quiet. You're absolutely right. Okay, So 9:30 last night, that would be 21:30. And we were looking to buy 20.99 1/4. Someone wandered off with my mouse pad, and so on my glass desk my mouse is not okay. So we're looking to buy 20.99 1/4. Swing high 21.04. So that's going to be 4 and 4.75. 4 3/4 points. And then important prices, important areas are almost always tested. And this got really kind of ragged across here. I don't know of any other term to give it other than ragged. $20.99 1/4. Okay. And then as we got back below, we got in a swing high at 21.0175, and we got in a swing high at 21.0175. So from 99.75 to 2,000 to 201. So we exceeded our 2 points on each of those moves. On the short side, we were looking to sell 93.75. Like we had 2 opportunities to do that. There's 20.9375. I got a line that's not straight. There. Straighten up. All right. So from 20.9375, we made it down to 20.91. So that's 2.75. If you're trading for your 2 points for the day, there you go. Well, if I could type 2.75. There we go. And then price got back above the trigger. And then price came down again. This time we put in a low at 88.75. 88.75. Well, that's 5 points, which makes me think I added that wrong. Let's go back and check that. Okay, we had a 5-point move here. Boy, when I find my mouse pad, I'm going to be a happy camper. Let me try this. Hey, paper works. Okay. 93.75 to a swing low of 89.25. Yeah. What was I thinking? I don't know. We'll use the calculator. Hey, I've got to make sure it's the broken one, because the new one doesn't work. My wife came in and cleaned everything up, so I don't know. I think this is the broken one, or the clean one. They're both clean. All right, 2090, enough fooling around. 2093.75 minus 2089.25. It's 4.5. That sounds more like it. Okay. Now getting accustomed to using a piece of paper instead of a mouse. Well, my mouse pad's got to be around here somewhere. She did a very nice job of cleaning it up. Ah, did she hear the mouse pad? And this static. Okay. So, there. Terra firma. Feel it. All right. So what did I say that was? 4.75? 4.5. I'll take it. So you had a 4.5 point move. And price gets back above the trigger, comes down again, and gives us 5 points. And then on this attempt to go back up and test the trigger, it didn't quite make it. And down we come again. Now, as we approach this 87, 88, you got to look at 2, 4, 6, 8, 10, 12, 13 candles. So about 6 hours, 6.5 hours. This served as good support. Price could not break out. Now, the time of day may have had something to do with it. You would think on the London Open at 3 o'clock that would have given it some strength, but it really didn't. Okay. Leg, retrace, leg. Now this is the highest weekly trading zone. So we've breached it. We've traded above it. It's not uncommon. It does happen. By close of business tomorrow, we do expect the market to be at 2096 or below. Okay. So this move was good for 4.5. This move was good for 5. This move was good for 4.75. And these couple of moves here, 99.25 up to 101, and that's 2.5. Both of these were good for 2.5. Now that's trading off a 30-minute chart. It looks a little bit different. And that's one thing I tried to do this morning, because I know that Michael doesn't have the opportunity to do that because he's moving really quickly from chart to chart, taking advantage of every trade opportunity that it presents itself. And so I tried to show some correlation of looking at the larger time frame, understanding what's happening there, and then taking that back to the smaller time frame to get an idea of which direction you really want to be trading in. Michael G., have you talked to Michael in the past about that? He's off today, but he might still pick up your call. I usually let him work those things out. Why don't you try calling him? I'm going to give you his number. You already got it, I'm sure. Yeah, he'll be happy to work something out for you. And if you can't get through to him, then email me your phone number and I'll call you this afternoon and we can work something out for you. All right. So we're dropping into the weekly zone at 87.88. The last time we were here, we rolled sideways for a long time before the buyers finally took it up again, took it up again. But notice that on this trip from here to here, this time as we were climbing higher, and then we came back down to that area. Okay, now we're part of a climb down. So what happens here in this zone will be important. If you traded any of these areas and you're trading for the 2420 blueprint, just looking to make your 2 points a day, you've had several opportunities to get that done. Okay. All right. Let's move now to the Dow. Now the YM today, it also traded above yesterday at 10 o'clock. We just barely broke the highest weekly zone, 18,005. And oh, Prince passed away at age 57. Huh. I wonder what the news on that is. Let's take a peek. Some of us in the audience let's see. I don't think he's in the drug scene anymore, but what do I know? The iconic musician was found dead at his Paisley Park estate in Chanhassen, Minnesota. Who would have ever thought of Prince living in Minnesota? But he did. Prince Rogers Nelson, the icon known to the world as Prince, and then the artist formerly known as Prince, has died according to TMZ. He was found this morning at his Paisley Park estate in Minnesota. He was 57 years old. Cause of death has not been confirmed, but last week Prince had been on a flight home from Atlanta when his pilot was forced to make an emergency landing to take Prince to the hospital. A representative said he had the flu. Born in Minneapolis, the iconic musician released 39 studio albums throughout his prolific career, including 2 in 2015, which I would not be familiar with. The music I would be familiar with would be the Prince of, probably more like 2000, Purple Rain. 1984's Purple Rain, as well as the film of the same name. Pitchfork named the title track the best song of the 80s. Purple Rain. You guys remember that, I'm sure. And this is what it feels like when doves cry. He was unique, one of a kind. I'll show you a picture. I'm sure you already know what he looks like, but Prince Rogers Nelson. And then at some point, I guess it was in the 90s, he decided to change his name. And it was big news. Prince changes his name to the artist formerly known as Prince. Well, it's a shame. And at a young age, 57. Now, he did lead a a hard partying lifestyle in the 80s and 90s, and that may just simply be coming home to roost at this point. You never know. Or it could be something completely non-related to that. I'm sure we'll hear more in days to come. All right, let's go back to this recap and get her done. Okay, the YM, buy 180.50. $180.50. $180.50. Swing high was 83. So that was 33 points. The Dow doesn't do ticks. It does points. And it was by 180.50. $180.50. All right, buy 180.50. We ran up to 83, so that's a 33-point move. And then important prices, important areas, so we test it, and this time we make it up to 80, so that's a 30 points. So if you're trading the 2420 blueprint, you had ample opportunity to take it away. Okay. And the last, these little guys here just went nowhere. The last significant move took us up exactly 21 points. Bert made a comment this morning about, you can only go to the well so many times, and this kind of is an example of that. Now, we were also looking to sell 17,995. Which is going to be right there. Or maybe there. Okay. Sell 17,995. Okay. So the first drop took us to 62. So 95 to 65, that would be 30. We actually went to 32. So that would be 33. Right? Right. So 33. And then important prices, important areas, tested, and on the way back down. This will be our biggest move. We dropped all the way to 930. So that's 65 points at $5 per point. Nobody gets out at the exact swing high or swing low. In fact, if you're using the indicators on this, you might still be in that trade. If the indicators have even kicked in yet. Yeah, I mean, you're trailing back here behind the BBC at this point. And you would need a close above the step line. That would be a green candle. Close above the step line to take you out of the trade if you're using the indicators. So if you're in the indicators, you're still in the trade. You've got 65 points so far. Over here, again, on this entry, if you were trailing initially behind the BBC, you had a pullback above the entry, but it kept you in the trade. Okay. All right. So now we'll go to the Russell. Do the Russell. And let's see what we got. On the Russell, we were looking to buy 1141. Now this alert came out at 2130. Something looks slightly off here. Well, we can clearly see that we had an opportunity to buy 1141 here. And we put in a swing high at 4240. So that's, you know, a maximum of 15 ticks. So nothing to write home about there. And then the sell side on the Russell was 1136, which was a little more substantial, from 1136, which is right here. We managed to put in a low at 1134.9, and then again at 1134. In important prices, important areas, there goes 1136 again, and this time so far we made it down to 1134.60. 1 point is $100, $100 per point. So if you're trading the 2420 blueprint, you only need 1 point in the Russell. I know that most of you are trading the Russell now because they started charging for the data. I understand, but I'm continuing to track it at least for the 30-day period of time that I got, for lack of a better word, tricked into. So there you go. All right. So we've covered the S&P, we've covered the Dow, we've covered the Russell. Let's go to crude oil. Which we'll find GCLM. There it is. Okay. Now this morning I drew this in the live trading room. It's a 30-minute chart. We were trying to determine what course of action crude was really taking. From this swing low to this swing high, we had a 38% retracement. Price had already put in a 30-minute leg trying to go higher, and then it was in the process of this when we looked at it. Now it's managed to make it to here. It's come back yet again to touch the 38% retracement, and it's attempting to climb out of there one more time. Okay. All right. So last night, 21.30. There we go. Joel says, look at the retracements from last Wednesday's high to Sunday's wild opening lows. In which market, Joel? In crude? Oh, okay. You know what? Let's change this to, I'll just get rid of everything that's written on there for now. And I will switch this out to an hourly so we can wow, that's huge. I've got to shrink this down. That's pretty amazing. It really is. This is Friday's close. This is the Sunday night Globex Open. And look at this thing. Leg, retrace, leg, retrace, leg, retrace, leg, deeper retracement, which lined right up with that low right there. And then this thing may not be done. And if we look at just the last leg up, we're at that 38% retracement. If we take a look at the entire move, from here, we're at a 24. So either way you look at it, last leg or the entire leg, we have Fibonacci retracements providing good support. Could be another leg in store. I don't do the Elliott waves, so I can't tell you if we're out of waves or if we're doing the ABC. But what I can tell you is what I told you last night. Let's see what that was. Now, kind of flat and sideways here so far during this trading session. We rallied in the early hours. So 21.30. Okay. We were looking to buy 44.30. It was a little pessimistic, but 44.30. Well, we can see that didn't take us very far. I don't know if we're going to get it. $44.30. All right. And so these little back and forths here, there's not much there. Well, I take that back. I mean, if you're buying, I guess I should stretch it out. I scrunched it up so much to show you the big move, but you can't see the small moves. So there were some small moves there. Buy 44.30. That's an interesting way to spell buy. It probably is in some language. All right, 44.30. We got a swing high here at 41. Okay, so that's an 11 tick move. How many ticks does it take to make your goal for the day? Takes 10. And then I think this one we said was 19. We get a swing high. 44.48. So that's 18. Okay. And last but not least, 44.49. That's the one that was 19 ticks. So that's $190 per contract. It's 180. That's 110. The goal, if you're trading the 24/20 blueprint, it's $100 per contract per day. On the sell side, did we do any better? Sell 43.50. Yeah, maybe a little bit. 43.50. Okay, so on the first drop, the swing low is 43.05, so that would be 45 ticks or $450 per contract. We never get out at the exact swing low though, because we're always trailing a stop, and you're going to leave some of that on the table. Okay, the sooner you learn to just accept it, not get upset about it, deal with it. This time on the way down we got to 43.30. Let me write in here, sell 43.50. All right, swing low, 43.05. Swing low, 43.30. And this next one coming down would be the one with the least amount of risk on it. And it might just be the one that produces the greatest results. We see that quite often. No, Tom, you've asked that question a number of times. It's not considered breakout trades only because they're done primarily inside of a range. Which chart would you like the indicators on, Maria? On the crude oil? I don't think crude moved far enough in either direction for the indicators to kick in and do you much good. We never really got going far enough. If you were trailing behind the BBC, if that was your stop, if you didn't take profit here, at 450 bucks, that's pretty tempting to take profit on. What you, and see, here we're coming. You need to get a pretty good move underway so that you can use the indicators, because you want the step line to be above or below the MA1, and in this case, in a short trade, you want the MA1 above, and then you need a bullish close, and so that puts you right back up here. So there was $450 on the table And if you were using the indicators in this case, it would have just stopped you out back up here. Now that might be something to get a little teary-eyed about. How big an account size would you recommend to trade the alerts? Well, Bart, most of these concierge trade alerts require, now in the one-on-one mentoring sessions, I go over with you how to establish your stop loss, whether it is a viable trade or not. And on average, I'd say it's about $300. You have to take a look at the chart and let the chart tell you where to put the stop. And that's stuff I go over with you in the private mentoring sessions. We take a look at the chart, and sometimes, even though we know that it's an important price and an important area, if the market doesn't give us a proper place to put our stop, then we're best off just walking away from it. This is an example here. The stop that the market had given us was way up here, and so that was another reason to stay away from this trade. And even though it was a trade that put $450 on the table, it quickly retracted and took it back. And we can go into that a little more in detail tonight in the partners workshop. Okay. You can go on, you can use a smaller time frame, Maria. You can go down to a 5-minute, you can go to a 15-minute. The 30-minute is not in any way a magical time frame. The question is, where is the most significant swing high or swing low? That's where you're going to put your stop. But again, I'll cover that in some more detail tonight if you guys want me to in the partners meeting. All right, next is the NQ. And I think these are still last week's weekly trading zones. Let's see. Although they certainly look like this week's, don't they? How well they've behaved. And that's the carryover effect. Carryover effect has gotten stronger and stronger as time has gone on over the last 4 or 5 years. It's really quite an anomaly, quite unusual. I may have adjusted these yesterday, I don't know. 51.52, that's a current zone. 30.31, that's a current zone. And 08.09. Yeah, those are current zones. I must have done that on Monday or Tuesday when we cracked the highest weekly zone. Or Sunday nights open. Right here. And we've kind of followed the S&P. Although the NASDAQ usually dances to the beat of a different drummer. Some similar action. Although this is not the highest weekly trading zone on the NQ. There's actually 2 more zones overhead. But we've just gone zone to zone. Now it looks like we're going to attempt to head back up to 51. If we go from 31 to 51, that's a 20-point move at $20 per point. And that's $400 per contract. All right, on the NQ, we were looking to buy 45.42. 45, 42. Somehow that one doesn't seem right either. 45, 42. Well, I guess it does, because the alerts came out at 21:30. So let me put a marker there. Yep, that makes perfect sense. Well, I don't know about perfect. And so the number is 45, 42. Yeah, this was kind of jagged. 45, 42, we put in a swing high at 49.50. So that's 7.5. And then on the retest here, that just led to a stop out based on where you placed your stop. This here took us up to 44.50. So we were looking to buy 45, 42. Yeah, Tom, that is a range, no doubt. Here, okay, we moved up a couple points. This was this morning, 10:30. We made a nice, strong, bullish move all the way up zone to zone. And so from 45, 42 to the swing high at 51. So that's going to be 9.75. We'll just call it 9. Always keep in mind when you have a buy that's taking you to a zone, there should always be, like in this instance, because you need 5 points at $20 a point to get your goal for the day, for the blueprint, there should be at least 5 points. In this case, there was 9. Okay. Then we came back down, and it looks like it might want to try and test it again. Okay. Could it go zone to zone to zone, back to the zone? Absolutely. It's that kind of movement all the time. Sell side on the NQ was 45.25, and that happened right here. $45.25. All right, so the first drop took us to, let me write this down. Sell. 45.25. We had a low of 14.25. So if we'd have dropped to 15, that would have been So it's 10.75. Correct me if I'm wrong. Now, with the NQ at $20 a point, you need 5 points. So there was 7.5, and there was 9. There was a potential stop out, and then this ran 10.75. Okay, and this here again, your stop would have had to be way up here, and so this was not a trade you really want to be in. Okay, if you want to know more about that, when you become a partner, sign up for a personal mentoring session or in a partner's workshop tonight. We can go into more detail about where we place our stops on these moves. We allow the market to tell us where to put the stop. Tom says the buy at 45.42 would have been problematic given the overhead resistance and the price area of 45.52. Well, here's the thing, Tom. You only need 5 points to reach your daily goal. And so from 45.42 to 51 is 9 points. So I knew there was 9 points room to run. On the first move, it ran 7.5 points. On this move, it ran 9 points. On this move, it resulted in a stop out unless you were aggressive with your risk management. That's what I was talking about when I explained when you have a weekly trading zone overhead, it gives you a pretty good idea of where you're going to take profit. And weekly zones are an area, so it may not always turn on a dime like it did here. It could turn early. But as it started to turn, it still gave you the opportunity to get out with your 5 points, which is your $100 per contract per day. And that's what you're looking to do. Okay. Moving right along. Let's go to gold. Okay, let's get rid of these for now, and we'll go 2130. Okay. So last night on gold, the idea was to buy 51, sell 47. So we had the opportunity to buy 51 right here, which was nice. The opportunity to sell 47 has not come into play. So buy 1251, okay. Of course, important prices and important areas are almost always tested. So the first move up took us to 1253. So that's $2 or $200 per contract. 2 points, $2, $200 per contract, however you want to calculate that. Now, this first move up, okay, took us to a swing high of 1262. Now from 1251 to 1261, that's $1,000 per contract. And what does the rule of thumb say? anytime you make $1,000 on one contract, what do? You just get out. From 51 to 61. $1K per contract. Leg, retrace, leg, retrace, leg, retrace, and then the big leg. Okay? Then once we got black below over here, this one ran up to 1256. So that was good for $500 per contract. Now once again, price gets back below the trigger here, but it's not until this one that we get another trade set up. This one puts in a high at 1254.60. So that would be 3.6 or 36 ticks. Okay. And now we've got another one trying right here. Now let's take a look at where the indicators told you to get out here. The market made $1,000 per contract available. But what do the indicators have to say about that? Start out, you're trailing here. Now, price gets on the north side, which is what we need for a climb. But then the step line gets on the south side of the MA1, and we're in a long trade, and so we need a red candle to close below the step line. Nope, nope. Oh, that's right on it. That's right on it. That would have complied with the $1,000 per contract. Anytime you make $1,000 on one contract, just get out. But you see, it didn't really close below the step line. It closed just above it. But a personal judgment call, if you wanted to be out there, you'd be fine. If you saw that as closing at or above the step line, I mean, there's a chance you could have rode it up to here. Now what are you going to do? Because now the next time the step line gets below is here, and this candle closes here. So you'd have done all this from 51 to 61 to 71. See, this one actually ran $2,000 per contract. And based on the indicators and your interpretation of them, 1271, there was $2,000 on the table per contract. 2K per. But that's a little bit of a rarity. It's not going to happen a lot. If you're in this move, that's a real good place to step aside. Now, this is a trade that required about $300 worth of risk, and we can talk about that tonight in detail in the partners meeting. What do we have left? After gold, we got bonds. Let's look at the bonds. Wow. Talk about a fall from grace. 21.30. Okay. It's quite the move. Bonds sell 163.05. That's right here. That's 07. That's 04. And that's 05. So 163.05. Okay. Now, this initial break, pretty big risk. This break, not much risk. Again, in the partners meeting tonight, I'll show you how to set your stop, when to take the trade, when to walk away. If you took this, you did real good. From 163.05 down to 162.05. Oh, it just made it. Are you kidding me? It ran exactly $1,000 per contract. But there's a big really. All right. Now, this is going to cause some issues. You get a leg, and then this deep retracement, and then the completion of the leg. So let's throw the indicators up there. Okay. Here, this green candle right here says get out. Now, if you get out there, now this is after you've already gone down and touched. You didn't trade through, but you touched $1,000 per contract. Remember the rule of thumb? Anytime you have $1,000 per contract in a trade, just take it. Because look what happened. The exit signal came at 162.29. So that turned 162.29. Let's see, there's 32 ticks to a point. 9 and 3 and 5. Turned it into 8. Turned it into a $240 trade from 1,000 to 240. This didn't tell you to get out. You had nothing to tell you to get out until here. Okay. Now, was this a retracement and downtrend and a continuation? Yeah, it still hasn't got back to the $1,000 mark. Now, again, it hit the $1,000 before it gave you the exit. So we could all use a few more trades like this every day. That's sweet. Gotta love that. Okay, let's go to soybeans, and looks like we need to convert this to, let me just wipe out everything. ZSN. All right. $21.30. Okay, what were we looking to do? By 10:32. No, there's a 10:32 in there somewhere. There you go. So from 10:32, we made it up to 10:43. Wow. That was part of that parabolic move Bert was talking about this morning. By 10:32. And then the swing high was 10:43.50. So that would be from 32 to 43. That's 11 points. At $50 per point. That's one of the biggest moves we've seen in beans in quite some time. Now the sell side of that, $10.19. And the swing low was 10.13. And so that gave us 6 points. This is some of the best movement we've seen in beans in quite some time. This rollover really brought life back into the beans. 10.32 up to 10.43, and then we were selling 10.19. $6 points. Yeah, no doubt about it. That's the best we've seen out of beans in some time. Okay, look at the S&P. It's actually broken through. We talked this morning in the live trading room about the potential for a trend down day. And so far, even though we made a very nice pullback here, the fact we got stopped right at the zone to the tick, now we've moved down to this zone and we've actually ticked below the zone. This could open the door for that broad move across the market to the downside. And these are all of this week's zones, so it's got plenty of room to fall if it wants to fall. Partners meeting tonight, 9:30. If you're a partner, come on down. Hope to see you there. If you're not a partner, if you have completed your trial and you're ready to become a partner, then by all means, send an email to support@cfrn.net. Michael should have already sent you an email that has the instructions on what you need to do to become a partner, where you need to click, and all of that. In the event you don't have that information and you do want to become a partner, then get a hold of us, support@cfrn.net or 949-42 Emini. 949-42 Emini. Okay? All right, guys, that's going to wrap it for today. Thank you so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.